Using debt has been ongoing for years, but as time goes on, there's a need for more debt and less capital. People utilize their credit card, equity in their homes, and every other form of debt in order to maintain a lifestyle of abundance, just like stock speculators using margin to boost their potential gains. As the saying goes, you reap what you sow, and said differently, this will eventually come around and hurt people who have taken excessive risk. You came here for the truth, so let me unveil that for you. Today we are going to look at the American dream of debt. But of course, this debt problem is not just in the United States, it applies to everywhere. I'm just using the stats from the US, but no matter where you are, people have taken on more debt than they can chew. This is a problem especially since the financial crisis. I'll be referring to some of these stats and how they have grown tremendously in the last 10 years. People have not learned, and of course, they will be burned. Let's begin by taking a look at this. Consumer debt is at an all-time high. We are seeing it now at more than $4 trillion. This continues to expand on all levels. That is the largest amount ever as of December. We're getting the stats as of the end of 2018 here, and it looks like people do not learn. Right now, there are 430 million credit cards in circulation, up nearly 13% from the end of 2015. I'll show you some more stats in just a second. Just in the past year, 4 million more people gained access to a credit card. Many people think that this is good, that this is wise, that people are taking on this credit. That's okay if you're responsible, if you're diligent to pay back. But as soon as you're not, that starts to create a problem for the companies you owe money to. And you might think, so what? Screw them. Well, it doesn't work like that. We'll talk more about this in a moment. U.S. credit card debt closed 2018 at a record $870 billion. Imagine just credit card debt specifically at this level here, nearly $1 trillion. When you see the comparison between all of the different types of debt, it starts to magnify the potential. U.S. credit card debt hit $870 billion, the largest amount ever as of December 2018. Credit card balances rose by $26 billion from the prior quarter. We have also seen an increase of 100 million credit cards since hitting the bottom after the recession a decade ago. What we saw during the financial crisis was that people had to start deleveraging. They had to get out of debt. They were selling those 5 homes that they somehow purchased with no incomes, jobs, or assets, and now they're getting rid of credit cards. They're starting to get back to some level of realistic image, and there is no doubt we have found ourselves in the exact same place in many ways. This is not a good thing. People were starting to get wise, getting out of debt, either because they had to, they foreclosed on their properties, or because they started to see that this is not looking good. So they started shedding all of that. And unfortunately today, we have seen people making the same mistakes over and over and over again. Credit cards were the 4th largest portion of consumer debt in the US after mortgage, student loans, and auto debt. It's unbelievable to see the amount of student loans that people are taking on today. They go to school for their time, let's say 4 years, 5 years, whatever it might be. Throughout this period of time, they accumulate tens of thousands of dollars in college debt, and they are not able to pay it off in most cases for an extremely long period of time. All of that debt is only going to compound. This is not good, particularly for those who are not finding work. They are not paying off the debt. They accumulate credit card debt. They accumulate automobile debt. And this only compounds on the pressure upon them. All of the things that they need to get done in their life are delayed as a result. Delinquencies are a big issue, and I discuss this regularly. Credit landscape. People who took out credit cards around August 2015 are now struggling. This shows you the delinquencies over the past 30 days. But what we can find today is that the amount of delinquencies is increasing in auto loans in particular. This happens to be credit cards, just giving you an idea of that. But there's another topic I want to discuss, and it's mentioned right here at the bottom of the page, and that is about the securitized portion of all of this debt. And I'd like to fit it in a little further down in the video. Here you can see that credit card debt closed 2018 at a new record high. This doesn't surprise anybody. Of course, you can see what happened basically with the mortgages, with other things as well. We saw the peak right here, 2008, 2009 time frame, and then it was a period of time in which people were deleveraging, but it didn't take them long at all. We saw interest rates coming down. Obviously, that was beneficial to a lot of people, and they started to expand their debt once again. As long as they had a job, as long as there was income coming in and they were able to pay the bills, then it's fine apparently to just accumulate as much debt as you possibly can. Forget about what happened before. That was a one-off event. It'll never happen again. Well, I may have heard that once or twice in history, and of course those people didn't do so well either. No shortage of credit. Both credit card balances and available credit are close to record highs. The orange yellow color is the credit card balance, and the white line is your credit card available credit. And you can see, I know this is for a lot of other people, I have polled the audience many times here on this channel, there's always consistently an offer for more credit. You can't do anything without being offered more credit. I've gotten the phone calls, the letters in the mail, the notifications when I log into online banking. It's a bombardment asking me for more credit. Just click a button, you're automatically approved, you're pre-approved, just take it. Nobody has to worry about this. You're gonna be totally fine. You don't need to use it, sir. Just please accept it. It's as if they want me to take on more credit. Obviously, we know why. Because many people will eventually at some point use it. Maybe not even right away, but they see that amount of money. Maybe they're desperate. They just need to get on vacation and that's the only thing. So they do so. And of course, this eventually burdens them heavily because of the high interest rates, particularly with credit cards. So they may choose line of credit. They may choose other things. This is constantly being accepted by people as the norm, but it shouldn't be. This also just shows you that it's approximately $1 trillion for the credit card balances, as I showed you just a moment ago. Credit card debt by age group, Americans in their 70s hold more than $1 in $9 of credit card debt. That is extreme because individuals at this time in their life should be all paid up, hopefully, you would think. They have their pensions coming in, they have their money saved up, everything is good. But I am looking at this data and I am very worried about that because of what could happen to a lot of people and what, unfortunately, I'm just going to be honest with you, the next recession is going to be absolutely terrible for people on fixed incomes. It's going to destroy them. And I'm not exactly sure what they're going to do about it, but, I can only speculate on that. But just to give you an idea of the breakdown, I'll show you that. Moving on. For all those people out there who believe it's okay to consume, here's some information for you. More subprime borrowers have credit cards. Much of the growth has been driven by a pickup in consumers with subprime credit, those with credit scores of 600 or lower, gaining access to a credit card. I think a lot of people are unaware of how this system works. When you have debt, it is not you paying a company and that's it. It's a transaction back and forth. No, that's not the way it works. So for example, you have yourself right here, this is you, and you owe debt right here. Let's say this is the bank, and this bank here issues you a bunch of money, okay? You got $10,000 on your credit card, and this transaction you believe is a one-way street between the two of you. Well, it's not the case because the bank goes out and it finds investors. They take all that money and they seek investors to buy it up, all the debt I should say, buy it up and they sell it off in little packages. These packages, they are collateralized debt. This is not a good thing, of course. We've seen what happened with the CDOs previously. Now in this cycle, it looks like CLOs, which are basically the exact same thing, are the new problem, the name of the game today. And of course, you're unaware because you don't see what's happening beyond this line here. You're not aware of it. You just have your bank, you pay the debt, that's it. It's end of story for you. However, what's going on behind the scenes is actually what's really worrisome because all of this is eventually going to set off a trigger. This will be detrimental. You got to think about this. So they've got all these different debt packages out there, and then you have one individual who defaults. Oh well, no big deal. It happens. They can write it off. Well, it happens again. And suddenly, when a very limited portion of people, doesn't have to be a lot of people, but a few of them start to default. It starts to take down all of these different products they've created, and then it will spiral out very quickly. That's what happened during 2008, and it taught us a lesson, at least for those who are paying attention. This is the problem with debt today. If you think you can get away with it, it will bite you in the behind, I assure you. Just study the 2008 financial crisis very closely and what led up to it. One of the books that I recommend, go down into the description under my favorite books. You will see Infectious Greed. That tells you sort of the history leading up to the financial crisis. So if you don't know that, if you haven't read that book already, then you're missing out big time. It's by an author that most people don't know, Frank Partnoy. You can see that he really knew exactly what was going on. I don't know why more people aren't aware of this book. I've never heard anybody talk about this book before, and so that's definitely why I recommend it to people. It's long, it's detailed, but you definitely learn a lot, and that's what it's all about. The average size of mortgages U.S. consumers were looking to obtain to buy a home or to refinance one hit a record high of $354,000. I always hear about people saying, well, those $1 million homes are over here, and where I live is significantly cheaper, and so on. That might be the case, but if we look at the average here, $354,000, it's a significant amount of money. Considering what people make on average, it's not that much these days compared to the actual price of homes, of their energy, of their food, and so on. This, of course, will be a significant factor for a lot of people. Their debt is too high and they are burdened by it. There's going to be defaults, there's going to be delinquencies, and as that happens, all of that which goes on behind the scenes is going to break down. That's all for this video. If you found it informative, please give me a thumbs up, and give me a thumbs up. You are supporting this channel, so I do appreciate that very much. Just hit the like button to support me. If you want the financial education you were not taught in school, the history, the asset classes, tax incentives, so much more, you can check that out at the link below. If you want the audiobook, that's available at themoneygps.com. If you want to know about the 37 million credit cards that are 90 plus days delinquent right now in the United States, click on this video and I will see you there.